Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, June 21st. Michael Boutros here with you this morning. Bungani, Graham, Horace, Kazaa, Pete, great to see you guys here in the room today. So, we got some interesting price action, some commentary from the MPC's chief economist, Andy Haldane, bringing up the pound here, nicely off support. We'll be talking some of the pound crosses today. On the menu for today's review, I have from yesterday's update, Kiwi Yen, Euro Kiwi. Obviously, the RBNZ interest rate decision is on tap after the close of U.S. trade today, so the Kiwi crosses will definitely be on the menu. Aussie Yen and Aussie Dollar, both with nice plays in overnight trade. Take a quick look at the DXY, and then we'll jump into some of the dollar crosses. Dollar Yen, Dollar CAD in focus, and Euro Dollar. And then we'll take a look at some of the yen crosses with Euro Yen and Pound Yen. I just want to touch base on gold, which is just basically still holding support. Crude inventories are out later today as well, so we'll take a look at crude prices. Not a big fan of where that's trading either, but we'll certainly take a look. And I will leave the room open for any other questions. So guys, if you have any other questions or trade setups you'd like to review, as always, feel free to throw them on the message board. Carlos, great to see you here in the room, as always. Okay. Let's jump right in. So, I'm really interested in the pound crosses, obviously because of some of those remarks that came out from the MPC earlier today, but I do want to just go in order. So let's just go through the Kiwi Yen and Euro Key real quick from last night. Both plays coming into their respective near-term support targets. So, we highlighted the threat of a possible pullback here in Kiwi Yen, which was coming off the key 618 retracement of the entire yearly range. Let me bring it up on the live charts here too. Here's where Kiwi Yen's at. So 80.68, okay? You also have that swing low, the opening range low for the year, which broke back here, shifting our focus to the downside. You can see that the decline came into a perfect basic trendline support. That held. On the rebound, we got some nice structure within the confines of this formation, and again, that 618 really curbing the top side here near term. Now, here's what the intraday looks like. And on this trade, I do want to be very cautious, guys. I want to caution you heading into the RBNZ. The basic trade, or the levels that we highlighted last night, was the opening range for the week, which is very, very clean. Okay, your opening range low is basically where we just bottomed out, just above 80.31. The lows were around 80.27. And you're looking for a break of the weekly opening range, which is taking shape just below into the highs on this divergence. And again, I noted this yesterday, and we talked a lot yesterday in the webinar about divergence, and we noted some key aspects of what we like to look at in the momentum signature. Again, here's an example of a divergent signal that took a little while to play out. And again, as I noted yesterday in the piece, divergence has no bearing on time. So we can continue to mark divergence for days, if not weeks, before it breaks. It's just important to note when it's there and when the trade is vulnerable. Now, we don't necessarily have a major key resistance that we're running into. This slope line is the same parallel of the channel that held this for the majority of, or I guess the latter part of May trade and the majority of June so far, right? 4 touches as support, 4 touches as resistance, break, their support. And it happens to coincide with the weekly opening range lows. So this is your focus range. Again, personally on my part, I would like to see a downside break on this. I have been more comfortable taking shorts on this than necessarily longs. So we'll look to see if we can get exhaustion on this. The ideal scenario on Kiwi Yen is if we get some structure. So if we get another high where we can start to add some slope, I'd be much more comfortable playing this trade. That being said, I'm looking for exhaustion on this rally well below yesterday's high. Okay. Again, the RBNZ interest rate decision is on tap, and that's really going to be the sort of the nail in the coffin here as far as the event risk for the week. It is a yen cross, so keep that in mind as well. And again, that interest rate decision shortly after the close of U.S. trade today. Very similar in that Kiwi dollar is holding near the highs as well, okay? I'm not interested in chasing this any higher from here. Obviously, the rate decision will be the determining factor, but, for me, I'm still on the mindset that we're looking for some near-term exhaustion here. Again, here's what the daily looks like. We're just straddling that 618 for the last couple of days since the start of the week. So objectively, Monthly opening, or the yearly opening range, here's your yearly open, broke in March. That's your ideal yearly opening range break. We should be looking for some near-term resistance around these areas. Interim support on a break to the downside. First things first, the 80 handle does represent a big region. You have some swing highs, former 100% extension, the former weekly range high from the 14th there, former channel resistance, and this is just the same parallel of channel support on a broader scale. So 1, 2, take a parallel to that high that we made back in May. You can see that we capped it right there again in early June, and the breakout was the accelerant. Okay, so that brings you down to 80, and that, my friends, is the break that would suggest that you have a much, much larger or more meaningful pullback underway in Kiwi yen. Again, I'm not crazy about getting long yen, but certainly the risk is there with a move sub 80. Any questions on Kiwi yen? All right, so this is going to be one of the ones that we'll be tracking into the trade of the interest rate decision. I'm not a real big fan of Kiwi dollar. I guess I'll jump into it right now. Kiwi yen was number 1. Number 2, we'll do New Zealand dollar just to keep things in line. Here's what the Kiwi looks like. We'll go over the dollar index as well, but just to put things, I guess, to keep the Kiwi theme going, here's what Kiwi looks like, and it's a messy chart. I didn't really want to go over this today, but I just want to show you what I'm looking at. This is basic trendline resistance. Okay, we capped that. We talked about it yesterday. I don't know if you want to call that a break. I don't. And the 618, again, very similar to Kiwi yen in that we're just straddling that 618 at this point. Momentum is giving you nothing. Okay, nothing. We've broken back below 70, but price hasn't followed suit. So right now you're just in consolidation at the monthly highs. Okay, objective, seeing the forest from the trees. We just got a big picture of what's going on. Drill down. Here's what the intraday chart looks like. So obviously you have near-term consolidation. Okay, a lot of people are going to call this triangle wedge, whatever you want to call it. You could probably take it off these lows too. Long story short, you're in consolidation. Typically, these patterns can be continuation. I have seen them be terminal, and that either way, it brings the focus to resistance up here at 72.75, that confluence basic trendline resistance and former slope resistance, and it brings support right here. Whoops, didn't mean to do that. It brings support right here at these former swing lows from back here in August of last year, and that converges on basic slope support down here near 72, 72.03 or 72.04. So those are the key levels I'll be looking for heading into the RBNZ tonight. Again, it's going to be a tough call versus the dollar. If you're really trying to play Kiwi on tonight's release, I still favor some of the Kiwi crosses. We'll go over Euro Kiwi next, which I think is a good one that we've been tracking. But as far as the dollar is concerned, the index is still testing support. We haven't really broken below. I wouldn't be surprised if we rally harder in the dollar. So I would like to see this thing give us that break sub 72, but that's the threshold I would need to see. Such a scenario, guys, 71.70. Okay, you have the swing lows from back here, really clean pivot in price. All right, you have the 100% extension. So if this is corrective, that would be the first area you'd start to look for some more meaningful support. And that gives you 71.66 into 71.70, okay, down here. So know the levels. Again, I don't know if it's going to be my primary play or my favorite play heading into the release, but at least I'll know the levels of which would clear the way for our directional bias here in Kiwi. Okay, they're not expected to shift on interest rates. The commentary is really going to be the devil here for the Kiwi crosses, but certainly the risk remains as we hold near the monthly highs here. Any questions on Kiwi? Again, not my favorite Kiwi cross. I'd rather be messing with Kiwi yen and Kiwi and Euro Kiwi heading into the release. With that said, let's jump into Euro Kiwi. Here's what Euro Kiwi looks like. Much cleaner. We've been talking about this since the start of the week, and such a definitive level that, again, you'll know right off the bat when we're wrong. You have the lower median line parallel of this formation we've been following since last year and this year's lows. You have the 100-day moving average, 50% retracement. Again, we're straddling that, but the focus is really on this key zone of support, this pocket that we've been looking for, basically since Sunday, guys. You know, we've been highlighting this for the last 3 days, this major support. And if you're going to see Kiwi weakness materialize, this is kind of the pair I would also be interested in playing. Now, again, Euro is not too promising at this point, but the levels are there. Here's the intraday chart. Super clear and super clean. Here's the 240. Let me just snap that trend line for you. You can see we came right into this pocket yet again. Guys, an example of building divergence. Every reference point, lower low, lower low, lower low, lower low, higher low, higher low, higher low. Okay, so you're getting divergence in momentum. The oscillator is starting to suggest that you're seeing downside starting to wane, but, with a capital but, okay, 50 hasn't been able to be broken as resistance since the start of the week. And in fact, hasn't been able to be broken as resistance since the start of the month, essentially. Here's the first. So another indication of which, when this changes, is a change in behavior. And as we always say, some things, some caveats. The last couple of days have been a really good RSI sort of lesson, I guess. But as a caveat for working with momentum oscillators is in downside trends, typically you want to see the oscillator hold 50 or 60 resistance. Typically in uptrends, you want to see the oscillator hold 40 or 30 support. You can see we saw both of that, both on the way up and the way down. So I'm looking for a couple different things. This divergence, I want to continue to see that gather pace. I want to see momentum start to pop through 50, and I want to see price first invalidate channel resistance, but more importantly, I do want to get above this 50 line. And that to me would be a little bit more of a conviction rebound play, targeting 56.27, which is just that swing low, the median line, and subsequent topside targets on a rip higher. But certainly this is key support, end of conversation. That being said, the only other thing I want to bring up to you guys, we'll drill deeper into the 120 chart, is that it has a very clean weekly opening range at this point. Again, let me just snap that line. There we go. And the weekly opening range, as we highlighted last night for Euro Key, is right here. 153.41, 154.50, 154.49. That's this range right here. Okay, the high that you made on Sunday and the low that you made also into the Sunday open. So both of those levels remain intact. We've just been bobbling and holding this key range above support. You know what to do. If we get that downside break, you're looking for a run in the 200-day moving average. You're looking for a run to the key 618. That takes you down into 52, 51.85. April low day closes down there. Targets are really clean. On a breach, the favorite side, again, we would need to get through that 54.80 level to really validate a little bit more of a topside play and a breakout of this descending channel. Any questions on Euro Key? On a weak Kiwi play, you know, I like this one to the upside. If Euro completely breaks down, like I said, you know the downside targets for a break below that 53.70 level. Questions? By the way, guys, is there any, I hope the video quality is better today. I did make some tweaks, so do let me know if you have any issues with the picture or sound flickering. I think we're good so far today. Okay, so those are the Kiwi crosses I'll be watching tonight. Kiwi Yen, Kiwi Dollar, Euro Key, sort of my favorite pairs right now. Also from last night, hey Horace, thanks, says good so far, awesome, appreciate that. I think I found the problem yesterday. Crystal clear today, says Pete. Thank you, sir. Or Bungani, rather. Pete says AV, all good. Thank you, sir. Appreciate it, guys. So looking at the next setup from last night, and again, these have been my favorite. I told you guys about these yesterday. I hope some of you caught it. Aussie Yen. You know, let me take a step back. Here's the daily chart. The big area of resistance, which we failed to close above, was like screaming exhaustion, 84.83. You had an exact confluence of the 100% extension off the low, the 50% retracement of the entire 2017 trading range, and median line resistance. Beautiful, beautiful set. So listen, the decline came into the yearly open. We went through it. Where we turned, is a little concerning. It did take out the initial targets, but it's a little concerning where we turn. So I definitely want to see how today's price action pans out into the U.S. Open. But this is still your key area of resistance near term. On a close basis, you need to get above that to mark continuation. The broader trend still remains weighted to the upside. Keep in mind where we are in the broader picture. Again, slope, we went over this yesterday. Okay, the slope of these three reference points off of last year's low, take a parallel of that off the low, caught that perfectly. You saw a pivot earlier this month. That same purple trend line converges on former slope resistance and the 50 line. I hope you can see this. I'm trying to walk you through it right here. Right here. So let's just say somewhere around 83.70. Okay, like I said, the 50 line of this, former median line resistance, and that broader purple trend line that we were working off the parallel off the lows. All that converges right here. On the intraday chart, that's this. Okay, and here's what the intraday chart looked like last night. Aussie yen. Okay, so we set a weekly opening range. We did a throw over. For those of you who aren't familiar with that terminology, it's very simple. It's just basically a failed run at resistance, a failed break. You know, some pairs are really notorious for this. Sterling being one of them, loves the throw over, break of support, recovery, and whatnot. But here's what I was saying. You know, we didn't quite get the tag into that trend line. We reversed back up, checking the opening range low from the underbelly. Former resistance or former support, now resistance. If we get back through this, the press against 84.83, in my humble opinion, is still underway. So I'm still looking to fade strength, still looking for that move into 83.75, 83.70 down here. Broadly speaking, I am just treating this as a near-term correction. Largely, I would be looking to get back on the long side. Now, there is a trend line here that you could sneak in, which would suggest that you actually just caught a basic swing off that. And it puts the emphasis further on just kind of a break of this slope. I would leave this on here for now, guys, because you have gotten multiple touches. Here's one, 2 touches speculative, 3 touch confirms. There's another, there's another. So you have some new slope to introduce that may just be an embedded thing that you want to kind of keep an eye on. Yeah, I don't want to get too messy there, but you get the picture. So we'll see if we can't get some short signals on this. Again, this was the deepest drawdown that we've seen in momentum this month on intraday, which is a good thing. A lot of people will always say, hey, when things are oversold, that's when you want to buy. Keep in mind, it's healthy in a downtrend for momentum to get into oversold territory. It's healthy for an uptrend for markets to get into overbought territory, right? So, not really concerned about that right yet. Any questions here on Aussie yen? $84.83 breach is what we would need to mark continuation. Turned at the weekly pivot point and the monthly R1, says Horace. Horace, are you talking about Aussie yen? Or was that an earlier comment? 1049, that was just now? That's awesome. He says yes. Okay, so you have the weekly and monthly pivots down here, yeah? Okay. Look, it wouldn't be outside the realm of possibility if that was the low. Just looking at this objectively, if this median line formation is in fact in play, yeah, the 50 line break saw acceleration. Again, we didn't quite get the tag rather, but analysis on this level is not going to be a perfect science. So that could be it. I don't know. All I do know is for me to start favoring the long side again, I would need to get through 84.40 here on the upside. I'm just going to maintain 84.80. That's still the level we got to beat. But broadly speaking, yeah, you're working on a breakout play and a rebound off of long-term support. So I do like this higher. I think the risk near term still is for a little bit of an exhaustion pullback. Make sense, Horace? Okay, that is number 4. Okay, so now that we kind of, okay, Horace says yes. Now that we kind of got a picture of Aussie yen, here's what I had yesterday on the piece for Aussie dollar, guys. And I just wanted to highlight this. I know that swing trades got stopped out on this one. You know, the basic premise, if you guys remember from the 15th, is we were asking the question, is this exhaustion? The 15th on the Aussies, where we saw the high, we actually kind of nailed it right after it. But, you know, the daily chart, as I showed you yesterday, I don't like for Aussie. It's been, you know, not really respecting our levels very much. You know, typically when we get this kind of messy action on the daily chart, I kind of drift away from the pair. But the intraday picture still remains pretty clean, which is why I don't want to shift your attention too far away from it. So here's what I got for what it's worth on the daily chart, guys. I wouldn't stress, you know, this structure just because you haven't hit the upper parallel. The median line's been kind of messy, but that's what I'm operating off of right now, is the fact that we're below this median line and near-term support at the 100-day moving average and the former 100% extension. Here's what it looks like on the intraday, and this is what matters. So the only thing that I liked about this was the fact that the structure remains super clean, and I feel like this has been the deal with Aussie, right? The daily chart's been messy, but the intraday, for the last couple of months, I mean, look at the median lines here, has been exquisite. Even off the ascent, while the break was messy of this descending channel, once we finally cleared it, acceleration really gave us a little bit more justification to use this slope. Now some sliding parallels of that slope have been offering better pivots than the actual pitchfork, but what I wanted to show you is this last night. Basic trendline resistance, 2 tags speculative, 4 tags or 3 tags confirmed. Take a parallel off the lows. Boom. Converges on key support that we've been watching at 175.56, 175.60. It's exactly where we bottomed out last night. So as far as Aussie dollar is concerned, I mean, this is big support. This is bullish invalidation for the near term. And until you get below that, I'm not really looking to get short on this. You know, you're at support right now. So near-term resistance 75.85, a breach above 76.23 would be needed to mark, you know, resumption of the broader downtrend. From a trading standpoint, again, if you put a gun to my head, I would think that you're going to probe lower before we start to move higher here. Just on the case of the dollar index, you know, is flirting with another push. That's into support right now. Here's the dollar index chart that we've been following since the start of the week, guys. The near-term resistance pop came to the first target, 97.78, pullback right at the median line, which converges on some swing highs and a 786 retracement. So the index is at near-term support. Into the U.S. Open, that's what I'm focused on. If this breaks lower, so you're seeing further dollar weakness, it might be a play, okay, for the Aussie to get a little bit more of a rebound bounce off of this support. So that's kind of what I'm thinking heading into the U.S. trade session. I don't necessarily think we make any major breaks here today. Again, don't have much data on tap. I think there's existing home sales at 10, but there's not really much on tap. You're really going to be looking for some of those Fed speakers tomorrow. I don't even think we have any Fed speakers on tap today per se. But a little bit more neutral. All I can tell you is that my near-term bullish invalidation is 75.60, 75.56. As a disclaimer, again, I don't have any open positions on Aussie. I haven't taken anything over the last couple of days, actually. I'm still kind of waiting to see what kind of reaction we get off the 75.60, 75.50. As I said last night, I was looking for a stronger reaction. The bump here only gave you less than 15, 20 pips to the upside, and we're right back down. So I want to see a little bit more definitive action against this level heading to the U.S. trade session. Again, the immediate short bias is at risk above 75.56. Okay. Could be a bull flag, would be a nice break, but you'd still necessitate that break above 76.23 to validate that kind of play. Topside targets unchanged. Questions on Aussie dollar? No change to any of those levels that we highlighted last night. All right. So a quick segue again back to the dollar index. I just wanted to show you this chart again. Feel free to take a snapshot of this if you need it for future reference today, guys. Here's the daily chart. We've been talking about the divergence into the trigger break. That was really the signal that you're likely to see a little bit more of a topside play here. We're still testing those former swing highs from late May. So be cautious, 97.78. We've talked about that level. That's still here. We haven't really cleared it yet. That's near-term resistance. A breach and that 98.28 level looks pretty darn sexy there up against the median line if we get further upside here in the greenback. This is near-term bullish invalidation, super close. So end of the day, you see a dip sub 97.50 into the U.S. Open. I would be looking for a move back to the 50 line. So near-term support here being approached by the dollar index. Pretty simple, not much to change here on the index. Any questions on the DXY? Okay, we are making good time. So that is DXY, that's number 6. Okay, so we have a clear picture of the dollar coming off near-term resistance, holding in the resistance range. What does that leave us with dollar yen and dollar CAD? Two pairs that we've been following very closely over the last few days. Here's what dollar yen looks like. And the abomination certainly, continuing to do abominatory moves as usual. What we highlighted yesterday was this. So, back on the 19th, here's what the dollar yen was looking like. And by the way, here's dollar index, right? We just came off this level and we're right back at support. So former resistance, came into that first target, back at support right now. For the dollar yen, okay, we were highlighting this upper parallel, the sliding parallel in red. That actually held as resistance. Okay, right here. That's where this is. And we pulled back. I was looking for a little bigger, of a drop back into 110.80, which is basically like the weekly opening range lows, former trendline resistance, this line right here. Would have been a really nice tag to look for another assault to the long side. It fizzled out way ahead. 111 was the low. We didn't even get a tag of this median line. But if you take a parallel off the lows, it looks like it could have caught support there. So long story short, you're right back at near-term resistance, 111.60, which was the target that we hit earlier in the week. If you do see a breach, the big level that we've been talking about is still 112.19, 112.24. That's the key 618 retracement of the entire decline off the highs you made in May. And it's a nice pivot in price from the swing highs that you made back in March. Resistance, resistance, break, acceleration, support, break, acceleration, converges on the upper parallel with the 618 just above 112. That's dollar strength though, right? And certainly for me, I wouldn't be too surprised to see that. Look at the daily chart, also highlights, and we talked about this as well, this basic slope, which has been invalidated a couple of times, but still every approach, strong reversal, strong reversal, strong reversal, gapped above. The break saw acceleration, strong reversal, break. Should keep the focus higher while above 110.75. That said, one thing I do want to highlight as well on dollar yen is the monthly opening range is so super clean. Here it is. 110.70 on the upside, just above the highs we made, just below the highs we made, excuse me. And the low was exactly at the 2017 low day close. When you see this kind of reaction, guys, if it doesn't excite you, you want to check your pulse. This is what we live for. So that's a clear-cut outside day reversal off of the lows, 2017 low day close, breach through near-term structural resistance. You need to clear the monthly opening range to really validate a monthly range reversal, monthly opening range reversal. And again, that would shift the near-term focus higher. Questions on dollar yen? Bear with me, actually. I just want to see what this looks like. Okay, too early. Questions on dollar yen. Going once, going twice, sold. Look for near-term resistance right here. Again, I want to stay constructive above 110.76. That is number 7, dollar CAD. Number 8, dollar CAD will be on the menu for sure today. You do get oil inventories shortly after the webinar here. Here's what dollar CAD looked like earlier in the week. Okay, and here's what dollar CAD looks like right now. So the basic thing with dollar CAD that you want to keep in mind is this recovery. So the daily chart, we've been talking about this major key region. 133.35 is the near-term bearish invalidation level. Major key resistance, you have the 200-day moving average, you have slope resistance both on the downslope and longer-term upslope resistance, all converging right there. On the near term, you also have a 100% extension right off the lows, gives you 33.35, and again that 200-day moving average estimate somewhere around that 33.30 mark. That's where I'm looking for a little bit more of an exhaustion on this topside play. What else can I say about dollar CAD? Here's some slope I was looking at yesterday. Don't really want to put this as a major play, but if you do put that there, look where it comes in. Just about that same level here today in US trade. So I think you can get that last push higher. You do have this median line here, which is the 50 line of the current operative structure. You didn't really see too much play off it, so I'm not going to stress it. Remember, previous price action is always what we want to look at. We don't want to just blindly chase median lines if we haven't seen clear constructive play off it before. So yeah, that is there. It lines up with the highs. That's 133, 133.30, 133.35 is a little bit bigger of a region for me. I'd be looking for resistance here on dollar CAD. That would be an area of interest for me as far as short exposure is concerned, exhaustion. Obviously, it's going to have a lot to do with crude prices, but guys, crude, I'm not interested in chasing the short side there at this point either. Any questions here on dollar CAD before I move to crude? D says, sorry, late again. Good morning. No worries, D. Great to see you. Always a pleasure. Any questions here on dollar CAD? Levels remain unchanged. I'm sorry, guys. I keep doing that. With the game plan still the same. Okay, we didn't have a concrete low here when we were presenting this back on the, what day was this? On the 19th. But now that we do have that concrete low, the 100 comes in right at that same level that we highlighted earlier in the week. Okay, 33.30, 33.35. Crude. So here's what crude looks like. And again, I don't like the daily chart, necessarily where we are here. I showed you that yesterday. The intraday has us at a basic 764 retracement. Okay. We were looking at this near-term embedded descending channel. That's still the focus heading into the open as far as I'm concerned, heading to crude inventories later today. 42.96 was the exact 764 retracement. That's basically what caught the lows. Okay, so the levels we've been watching have actually been pretty clean. Got to shift that retracement to the new low. Basic 236 takes you into the weekly opening range high. Bear with me just a moment. I want to see what this looks like. Okay. Okay. So yeah, I wouldn't be too surprised to see a little bit of a recovery here in crude off these levels. I don't want to be the guy trying to call the low, but wait for oil inventories today. If you see a bounce off this trend line, you see this trend line right here on the daily chart? Let me bring that up. So I know this is messy, but keep your eyes focused on this. 1, 2, 3. The median line travels right through here. So maybe a spill final dump into 42.20 would be a decent region. This is huge down here. I just don't necessarily think you get that dump after this dramatic of a decline. Maybe I'm completely wrong, guys, but that would be sort of terminal support as far as I'm concerned. If you look at the slope lines we've been following since the late highs or mid-year highs we made in 2015, That was a big structure that caught major pivots in price, both on the parallels and on the breaks. And that former resistance line coincides with the current operative lower parallel, the 1618 extension, the 50% retracement. It's a whole host of things. That's 4052, 4084. Again, I'm not that long-term of a player that I would be sitting in a position for this long, but just to give you perspective of how precarious, okay, this breakdown has been. So the long and short of it, guys, right now, heading to the U.S. trade session, again, I'm looking at near-term support here. A pop through this region, 43.75. You'd look for maybe a rally back into channel resistance. At the end of the day, 45 is the level you need to break. Basic weekly opening range high, a basic 236 retracement, and that would necessitate a breach of channel resistance. That's the only thing that would shift me a little bit more towards an upside bias on the immediate front. That being said, you're in the downtrend until you're not. Watch U.S. inventories or crude inventories coming out shortly after the webinar. Questions? It's going to be an interesting setup. I wish I had a little bit more conviction on the crude trade right now, but certainly with this decline, it's making headlines all over the place. That's when you want to be a little bit more cautious about trying just to follow and chase the trend. It seems like everyone and their mother is getting super bearish at this point, and that's has me concerned about trying to play the short side on crude. And by the way, guys, these production cuts they've been talking about with OPEC, it's been happening for years. Question is, are they actually going to do it or not? I can't even tell you how many reports I've written about possible OPEC production cuts and all this. Okay, so that is dollar CAD and crude. That's number 9. Let's go over some of the euro crosses, euro yen, euro dollar, pound yen. Also, guys, as always, feel free to throw out any questions or trade setups you want to follow. Here's what euro dollar looks like right now. Here's what it looked like earlier in the week. Oh, I was back on the 19th. Here we go. So, okay. So here's the setup that we highlighted earlier in the week, and we cited 112.29 as our bullish invalidation level. That's really the level that will invalidate the long side. I was looking for a hold at 111.60. Didn't happen. It broke. We got stopped out. Here's what the intraday chart looks like now. Well, let me show you the daily first. So the reason 112, 111.28, 111.30 was such a big region is because of obviously this key 618 fib, swing lows, the sliding parallel, okay, which ends up being actually just a sliding parallel off this high. Caught that. That's there as well. And just below that, you got those swing lows from last month, back on the 30th. Just right around like 111, what is that? 111.18, 111.20 on a stretch. So we're testing that region right now, okay? And the rebound, interestingly enough, look at this structure. You get a 240 minute. And the rebound is now testing that parallel as resistance. And that's going to be our first tell. You see this break? Test as resistance. If this high holds, you'd need to see a bank break below 111.20 here, 111.29. And that would be suggestive that you broke support, tested resistance, looking lower. 110.75 is a big region. If we break back above 111.70, that would be put us back on course for that 112 level. And that was the opening range highs. That was the weekly open. That's the 50 line or the 50 bisector of the upper half and would shift my attention back to the upside. But until we do that, the focus right now into the U.S. Open is this key range right here, real tight. So we'll know pretty early in the Open, I think, which direction you want to play euro. The risk is if you break 111.20, guys, just don't try to fight this. At the end of the day, we are marking some divergence into this lows. You can see equal lows here in momentum as price action presses a new low. Long story short, support is support. 111.20 is the level to keep an eye on here for euro dollar heading into the U.S. Open. Lost AV. Anyone having any issues besides Pete? Okay, thanks, Pete. He looks like he's back. All right, cool. Karthik, thanks for that. Okay, I see some questions here from Pete, both on gold and sterling. We'll take a look at both of those. Any questions here on euro dollar before we move off? And again, 111.60 was here, guys. This is what I was talking to you guys about in the webinar yesterday. This is kind of the first area I wanted to see hold. It didn't. Break is a break, and now the risk still remains. You know, if we move sub 111.20 for euro, see a little bit more of a downside break. Euro yen, that will be number 11, and here's what euro yen looks like. So this guy has been very clean on the near-term chart. Recall the daily chart of euro yen, we were looking at this. We've been tracking this one for a while. Obviously, the downside rejection here of a break of major key support. I talked about this yesterday. I got faked out on this. I thought this was a legit break. We closed below it. Outside day reversal the following day really shifted things back to the upside, taking us back above that key threshold. You have the 2017 open, a basic 236 retracement of the yearly range, and former slope resistance, all which converged on the median line. So this is what price action does sometimes. Again, the reversal back to the upside takes us right back into the monthly open resistance, and that's still the level we need to clear. Specifically, the monthly open here at 124.52 continues to be the near-term resistance. You have basic trendline resistance off the highs. We've been flirting with a break, haven't been able to close above it just yet. Here's what the intraday chart looks like. Bring this into a 120. And here's what we looked like earlier in the week. Okay, so earlier in the week as we opened, this was on Sunday night, we were talking about 124.40 being the resistance level. We went into that. It held as resistance, came back, checked the 38.2 as support, which was 123.79, adjusted for the new high. We came right into that 38.2. That's right here. And now tested the 50 line, back into the median line. So I'm liking playing between this median line and this, between the 50 lines, guys. That's what I'm playing here on euro yen. So as far as trying to take any new exposure from here, you're right in the middle of that range. So you don't have any plays from here. The play would either be on another attack to the downside here, a slope. I wouldn't be looking necessarily all the way into 123, but depending on time, I'd be looking on that slope now. We've gotten really nice plays on both ends. And then, again, a breach of the weekly opening range high would be the only thing I wanted to highlight is if you see a break below 123.80, I wouldn't try to long this until we get down here, because I do think at that point you risk a run back into this region here. Okay, and it just happens to be the 618 of the rally we just made. So game plan. On a move back, I'd be looking for exhaustion into here. A break below 123. Again, I'd be looking for longs near 23.80. I'd be looking for longs near 23.25. A breach above the highs. You're looking for stretch of 126. High day close, 125. The high day close comes at 125.35, and that's sort of, you know, the level to beat for marked continuation of the broader breakout here. Questions on euro yen? Remember, we're working under the premise that this thing is trying to maintain the breakout of this multi-year formation. Here's your 2016 open. Here's your 2017 open. If we were to make a break of the monthly, opening range lows, the lows that we just made, the 2017 open, all that good stuff. If we do make a downside break, this whole region of last 3 weeks would be suggestive of sort of a false break scenario. Okay, that's how critical it is that we stay above the monthly lows, and specifically on staying constructive above basically 2258. I'm short at 2390, says Karthik. Okay, so you're a little underwater on that. Let me ask you a question. Where is your stop on that one, Karthik? So you're about 40 pips under on that. If it, I mean, it's another 20 pips to the upside, but if you mount 2450 again, I would start to get a little concerned. He says 2465-ish. Yeah, I guess that makes sense. Just above that retracement. I mean, obviously above the high is the best way to play it. You know, I don't. Yeah, it's a bigger stop than I would be willing to take typically on an intraday scalp. But yeah, for me, you know, even when we sail through these fibs, I still will tend to target them, especially if they've made it a high before earlier in price. So yeah, watch that mount through 2550, 2552. If you do see a topside break, you know, you're likely to get a little bit more of a continuation higher. Okay, hope that works out for you. Good luck on that. Raphael, keep me updated. I haven't gotten any messages yet on that. That is Euro Yen, number 11. Last but not least, Pound Yen, and I'll jump into your questions here on gold in just a moment. Karthik, here's what Pound Yen looks like. Again, way too early on this one. If you guys recall, I was calling for 140.90 hole. I was really looking forward to a long off that region. Gladly I didn't take it because there was no triggers that actually put me into the trade, but I kind of shifted my focus away from it, and last night, here's the rally. So what happened in overnight trade? Well, earlier this morning, guys, we did get some commentary from Andy Haldane, who is the chief economist for the MPC, the Monetary Policy Committee for the Bank of England, and basically he came out saying that, you know, they're ready to hike interest rates, quote unquote, relatively soon. He says the risk of holding interest rates down for too long versus hiking a little bit earlier is more weighted now to hiking earlier. Now, why that's important is because he's typically seen as a dove, and this is the most split that the MPC has been in years. So certainly if you're getting more members leaning towards a dovish stance, that would suggest that, you know, you're likely to see the Bank of England move on interest rates sooner rather than later. And certainly one of the comments that he, you know, that was picked up by multiple news wires were his remarks about inflation. He's saying that, you know, risk of tightening too late was that it could force the bank basically to hike rates much more rapidly to stem rising inflation. Keep in mind, inflation right now is 2.9%, came out in May for the UK. So their 2% target, you know, they're well above that. So with the split we saw at the last BOE meeting, and now some of the members starting to shift a little bit more towards the second half of the year as being an appropriate time to hike rates, you're seeing that the pound saw a really nice rally off of that 618 retracement at 140.15 here versus the yen. So look, the channel resistance that initially put us constructive earlier in the week because we checked at a support, we did break below it, but the break above it saw acceleration, and I'm willing to take a little bit more of a risk or a bet to stay constructive again above 140.90. So that's kind of what I'm thinking of right now. I'm just leaving this slope on here, by the way, guys, because former support or former lower parallel may act as resistance. If we do see a acceleration through, I'd kind of be wanting to look for a new slope. You know, maybe something like that, or something using that high. I can't decide yet, but if we do use that, and I'm just doing this for example purposes, guys, if we do use this high, you know, the upper or the median line comes in just higher from where we just capped out, and that would also further highlight a breakthrough 42.27, weekly range highs, median line, 38.2 retracement as sort of the breakout zone you would need to validate the move in pound yen. Remember, we're coming off a big region, guys. Look at the daily chart. Remember where we're coming off of. Basic trendline support, 1, 2, 2, 3. 200-day moving average, 764 retracement, perfect touch of channel support, rally. Look at the pullback. Is that the low? Only one way to tell, and that would be with a break of the range highs for the week. Questions on pound yen? Our notion of pound strength hasn't really panned out, guys, so I'm going to take a little bit more of a cautious approach on any pound long positions I'm looking at, but certainly you're above support, still above support. Okay, that is number 12. A quick look at gold. Here is what bullion prices look like heading into the open of U.S. trade. So we talked about support at 1241, 1245 at length last week. We've been sitting here on a close basis for the last 3 days. We're checking the lower bounds of that key range as we speak. So it's a bearish trend at support. Do with it as you please. You're getting some ongoing divergence. I'm not really interested in taking a short from here into support, into the U.S. Open. If you were to rebound and find some sort of short trigger into 1245, a stop against the overnight highs would be the only way to be looking to play a short break. Other than that, again, if we clear 1250, look for a near-term recovery. In such a scenario, basic retracement would serve you best. But as it stands right now, I'm not even going to add that because we're still basically probing new lows. So beyond here, guys, if we break even lower, I don't have anything to like 1231. This thing is just, I mean, probably more prudent to bring it into 764. Even then, 1233. There's really nothing until that. So again, another one you'll continue to see meander here. Can we expect a break towards the upside? If we mount 1247, 1240, basically 1247, yeah. I do think it's kind of begging for a recovery at this point. Look at that thing. Look at that thing. Not only that, why I don't want to play the short side, because you have the 200-day moving average just below it, 1238. See where my cursor is on the left? So it's like $2 below where we are now. And the 200-day moving average has been a pivotal play for crude. Here's the break, saw acceleration, the pullback, instant support. Break to the downside, acceleration, failure at resistance, failure at resistance, failure at resistance, break to the upside, acceleration. So either way, you're coming up in some critical levels here near term. If you have some spare time in relation to Aussie, really, copper, you know what? I haven't looked at copper, Raphael, but let's take a look. You're asking the right guy. Let's see where we are. Okay, here's the daily. And certainly we've been watching this slope, which is basic trendline support off the yearly lows that we made in 2016. Again, again, and again. 4-point touch trend line. Some parallels, perfect pivot, resistance. Some parallels, takes us into support, basically where we are right now. Monthly opening range just above slope support. You know what? Let's just scratch this one. Keep the focus on that. So look, you're checking monthly open resistance right now as we speak. This is where we opened June trade. So essentially all of the chop that you've seen in copper so far this month has left the commodity unchanged, Raphael. So, you have to be neutral here because you're above upslope support and you're below downslopes resistance. Still have the resistance right there at the 200-day moving average, which converges on that slope. It's 261, 260. Support right there with that median line. I wouldn't even be looking at this low at this point. Okay, so you kind of have a picture of where we are, broadly speaking, within the monthly range, which starts right here. You're unchanged. You're right slap in the middle of the monthly range and within the yearly range. Let me just add some color to this to give us some picture. Is the 50 where we capped out? Yeah, is the exact high. Okay, and let's go into the intraday. And the 618, woo! Thanks for asking. This is actually pretty sexy here. So the pullback, perfect 618, perfect 618 confluence with a really strong rebound. And we had a soft target here at 2. I think this is the monthly open. Just below. All right, these are the key levels I'd be looking at. Oop. That's terminal. This is your breakout. This is your breakout level right here, 260. That upper parallel would be an exact 618 retracement, swing highs, a break of the weekly opening range. That would be the breakout zone. Wouldn't necessarily stress this slope, but it's been seeing some decent pivots on a closed basis for the 2-hour chart here. I'll leave it on there, but this is sort of the breakout zone. This is your bullish invalidation for the near-term slope on the upside. So 260, 254, major key range that you'll be focused on for copper prices heading into the U.S. Open today. Raphael, does that help? On copper, that's actually pretty impressive. I didn't look at this yet this week, so I'm glad you brought that up. It's pretty cool. It's a really nice level. So if it breaks up, pulls Aussie with it, I'm cautious about to really rely heavily on those correlations. If you guys notice, the intraday updates every day have sort of been independent, right, of the swing, of what's been going on with the fundies. I've been taking every trade on its own merits completely, just because the corollary plays right now have been kind of tricky. You would think, okay, if you do see a topside breach in copper, you would think that would alleviate some of the Aussie weakness. I wouldn't necessarily say would pull Aussie up. And that's the cautionary note I would always say. I always say when we're trying to look at these correlations, if copper were to break to the upside, yeah, I would be cautious about Aussie shorts. Wouldn't necessarily mean I would just want to go blind Aussie long. Okay. Now it happens to be that Aussie's at support. So sure, if I get a long trigger, copper breaks to the upside, great, further fuel in the fire, right? But to base the trade premise on a rebound in copper, Raphael, that's where I get a little concerned, okay? Because those corollaries intraday can diverge like no one's business. And on an intraday basis, when we're trading it, I would hate to have a losing trade or just to watch my trade evaporate because that corollary relationship broke near term. So just use that as, I just want to caution you on that. But yes, to put it blatantly and simply, you would think that it would start to alleviate some of the Aussie pressure. All right, guys, that brings us into 9:30 and the end of today's session. Quick reminder, Jamie will be up with the midweek strategy webinar at 11 a.m. shortly after the close of this webinar. Keep your eyes on the oil inventories. That'll be a major market mover. Again, dollar CAD is in focus. Watch for 133.35. If we do get an emotional spike into there, it might be an area of which we'd start to look to fade. Really depends what the inventories say, but keep in mind, again, that's shortly after the webinar here. Till then, best of luck trading, guys, and I will see you all tomorrow morning. By the way, sound only broke down twice for about 5 and 10 at the time. Thanks, Raphael. Still tweaking my end here on some new stuff, so I will have that worked out for you. See you guys tomorrow. Cheers.